Welcome to the Grow Your Law Firm podcast, brought to you by Pilma. This podcast helps lead lawyers to more growth, profit, and freedom. Here is your legal marketing expert and host, Ken Hardison.
Well, hello, everyone. This is Ken Hardison, and welcome to another episode of Grow Your Law Firm. And today we have the honor of having John Gentille with ERC, which is, we're going to talk today about whether or not your law firm qualifies for the Employee Retention Credit Act. And most law firms, their CPAs have told them that they don't qualify when in fact they do qualify. So I want you to pay attention, get out your pencil, your paper, and take down some really good notes, because this can make you a lot of money and not cost you anything to try to see if you qualify. So, John, thank you for being on our podcast today.
Thank you, sir. It's been a pleasure to work with you.
Okay. So tell us a little bit about yourself and your company and what y'all do.
My name is John Gentille, and prior to helping start ERC Today, I worked at a very well-known national payroll company called ADP. And back in March, I got a call from a very close friend of mine, who's my partner, Stephen Swanek, who at the time had owned a CPA firm. And he called me and said, "John, what do you know about the Employee Retention Credit?" And I had no idea what he was talking about. And the comical piece about that is that most businesses, as you know, are not aware of this or are not aware if they qualify. So 3 weeks later, I resigned from after a 17-year career at ADP, and ADP is a great company, but I saw an opportunity and took advantage of it. And Steve and I started a company called ERC Today. So who is ERC Today? We're a small startup. We have about 30 employees currently in Huntersville, North Carolina. And we claim ourselves as a technology company that also has consulting behind it. The reason why I say that is because what we figured out a way to do is to help automate through technology the administration of the Employee Retention Credit. What takes most of our competitors months to do, we can do within a week. And it's very important to note that, because at the end of the day, it takes about 4 to 6 months to get paid. So if you go with a partner like ERC Today, we can do our entire consulting pretty quickly. And that's important for you to understand, obviously, because this is not something easy that anyone can do. As you mentioned earlier, a lot of the CPA community are attempting to do this. And at the end of the day, it's a very confusing process. And there's a lot of bad education out there, regardless of who's giving it to you. So, we have this company that we started, and fortunately we had the opportunity to met people like you and have the opportunity to just educate the public on what ERC is, who we are, because who we are is very unique. Is we let any business in the country apply on our website and our partners' websites at no cost. Within a couple of days, we let them know if they qualify, don't qualify, or we need more information to help them qualify. If they do qualify, we inform them what our process is, what our fees are, and we give them the option to upload their information, or if they'd like, we can go pull the information on their behalf to a secure Dropbox. Within a few days after that, we reply back to them and say, "Hey, congratulations, you initially qualified for up to," I'll give you an example, $500,000 in employer retention credit. You're within a certain percentage of that, our original estimate. It's now up to you to make the decision. Do you want to move forward with ERC Today, or take what you've learned and go out and do it on your own? As you can imagine, Ken, most people respect the fact that we did a lot of this work up front at no charge and move forward with us. Once they decide to move forward with us, we amend their 941. We give them their final count. We send it to them in an email. They sign it and send it to the IRS. And then they go into that waiting pattern of 4 to 6 months. And then we work on the next return. So that's kind of an overview of me and our company, but we really appreciate you just giving us some time to help educate your members.
Thank you. Thank you. So what is ERC? What is the Employee Retention Credit? Because it seems like there's been two different bills, like one was in last year and one this year. Can you tell us about them and what the difference is? And
Absolutely. We call it the ERC, and that obviously stands for the Employee Retention Credit. It was a program put in place by the CARES Act, which was signed into law last March when the pandemic hit. It's a COVID-19 economic stimulus plan. Originally, businesses had to choose between PPP, as we all know, or the Employee Retention Credit, but you couldn't take both. And that's why we believe most businesses are unaware of it, because PPP was almost immediate funding. And as I mentioned before, the Employee Retention Credit takes about 4 to 6 months to get paid from the IRS. However, on March 1st of this year, the IRS released a notice 2121, which updated the guidance to allow any business that got PPP, and if they qualified for the Employee Retention Credit, to go back and get both. So again, if you got PPP in 2020 and you qualified for the Employee Retention Credit, you can go back and what we refer to as double dip or take advantage of both programs. And then on August 1st of this year, the IRS made another announcement about another program that, again, I feel very few people know about. It's called the Recovery Startup Business. And basically what that means is any business that started operations after February 15th, 2020, that has under $1 million in revenue can claim up to $50,000 in Q3 and $50,000 in Q4. So that's a higher view of what is the Employer Retention Credit. But people see it as a tax credit. When it came out last year, that's what it was called, and that's what everyone assumed it being. But it's truly a cash payment directly from the IRS, Ken. And there's no dollar amount limit to a business can receive. Again, it was originally applied to 2020, but then in 2021, they extended it through this year. It interacts, like I mentioned before, very specifically with the PPP. Every dollar of wages can be potentially used for either program, but not for both. There is a specific understanding how to optimize the programs. And that's what we do on our end. The program requires an intense knowledge from a client. We have found very few businesses do this on their own. In fact, I have one business in Charlotte that did this on their own, and they called me 2 weeks ago and they said, we did it wrong. So we're now analyzing with them now. But at the end of the day is we tell everyone, go to a specialist, reach out to a CPA, reach out to businesses like us, because the last thing you want to do is do something that you think is right, in 4 to 5 years get audited and realize you did it incorrectly.
What is it that makes you qualify? I mean, is there 2 different ways of going at it?
There is, and again, it's a lot of information. So people are getting confused by both programs. There's a 2020 program and a 2021 program. Both programs, you have to issue W-2s and have Form 941s. We get a lot of questions that, hey, I have a bunch of 1099s. I'm sorry to say that you don't qualify. Or self-employed individuals, they don't qualify either. So the 2020 program works like this. You have to have 100 full-time employees or less. So for example, if your firm had 80 full-time employees and you had 50 part-time employees, you qualify because you're under the 100 full-time employee count. The program changed greatly in 2021. It went from 100 full-time employees to 500 full-time employees. That's a significant change.
Yeah.
Now, the next statement is an either or statement. You don't have to have both what I'm about to say. It's either A or B. And A is what we refer to as the reduction in sales method. So in 2020, you had to have a 50% reduction in sales, or what we refer to as gross receipts, from one quarter of 20 to the same quarter of 19. So for example, if you did 100,000 in sales in Q3 19, your business had to do 50,000 in Q3 20. Now in 2021, the program switched. So instead of being a 50% reduction in 2020, it's a 20% reduction. Okay. So if your business did the same example, 100,000 in Q1 19, you only had to do 80,000 in Q1 21. If you hit those parameters, you qualify for the Employee Retention Credit. Now, there's a lot of businesses that, for one reason or another, did not hit the sales mechanism. There's another mechanism. It's a little more gray, but it's called the Shutdown Method. And the description of that is if your business fully or partially shut down, you would have the capability of qualifying. Now, if you think about law firms, for example, most law firms, not all, they did shut down, but they went remote, correct? They did remote working, they did Zoom calls. So in our opinion, the way we interpret the law is that a law firm might not qualify for the shutdown method because they still worked. They couldn't do as many things. They still went remote. We have talked to a couple firms that, believe it or not, I guess they were small, they fully shut down. So what we've seen a lot of law firms qualify is on option A, is the reduction in sales piece. And we think the reason for it is because courts were shut down.
Okay. So let me get this right. The 20%, is that the same from any quarter in 2020 compared to the same quarter in 2019?
Correct. So it has to be like quarter. So in 21, if it's 21 Q1, it's 2019 Q1. And you can't go like 2021 Q2 to 2019 Q3. It has to be the exact quarter compared to 19.
And it could be 2020 or 2021, either year?
So 20 has to go back to 19 and 21 has to go 19. Regardless of 20 or 21, everything backdates to 2019. That's a lot of people misread that.
Yeah. And so if your CPA has told you, well, listen, you got PPP, so you can't get this, then they're not right. They're not correct.
And we've had a lot of that happen. I mean, and no fault to anybody. We understand that this is a very complex code and law. We've had, in fact, we've had a lot of companies go to their CPA and do what we do when we go to a doctor, get a second opinion. Even companies that have come to us, they've gotten a second opinion. And so one example was we had one firm in Texas that came to us and their CPA said they got, I think it was $37,000 in ERC for 2020. And then they just thought, hey, I'm gonna get a second opinion. They came to us and we did our analysis and their CPA made a major mistake. We analyzed it and they're getting 4 times more what they initially were getting with their CPA.
So how much can you get and how do they calculate what you get?
Great question. Is the way that the numbers work on the financial piece is that in 2020, the program works is you can get 50% of the wages up to $10,000, right? So if you had 80 employees and you paid 70 of them $10,000 and over, you can get you get $5,000. But there are some organizations that, you might have hired me today and I worked 3 weeks and I either realized this firm wasn't for me or I just wasn't a great employee. And you might have paid me $8,000. You could still get 50% of the 8 because it's 50% of the $10,000 in wages. So you can still qualify for $4,000. So again, 2020 for the whole year, March to the end of December, it's a $5,000 tax credit, which again is a cash payment from the IRS. Now, 2021 greatly increased that. In 2021, instead of it being a $5,000 per employee for the year, the IRS made a very unique change to the law, and it goes up to $7,000 per employee per quarter. Again, $7,000 per employee per quarter. And it's a very similar concept to the calculation of wages in 2020. Instead of it being a 50%, it's a 70%, up to $10,000. So, we say to organizations, you could potentially qualify for the max, which is 5 plus 28 in 21, which comes to $33,000 per employee. But think, oh, wow, that's a lot of money. But then you have to realize that if you got PPP1 and or PPP2, the wages that were associated with the PPP program, you can't use it for the employee retention credit. And that's what we do in our analysis. We analyze PPP1, if you got PPP2, if they're forgiven, what's left over, and then we look into other options to pull wages from. One of those is if you offered health insurance and the employer paid towards health insurance can be used for wages for the employee retention credit. So that adds into some of the opportunity to increase the ERC credit. And for law firms, we've noticed a lot of organizations pay a lot towards the premium because they're trying to do what's best interest of their employees. And by doing that, it helps for this. And then one last piece that I left out is turnover. Every organization has turnover. Turnover is not easy. But for the ERC, it's great because even though you paid someone and they terminated, there's wages there. So that terminated employee or W-2 can be put towards the employer retention credit.
Cool. Well, I think you made it. I mean, I know it's very complicated, but I understand it now. I didn't understand it before we got on this call. I think I understand it. It's either or. Forget about the PPP, other than it might calculate in the amount you get, but you can figure all that out. So if they qualify, then how do you charge? So you'll find out. You can go to this website. We're going to give everybody at the end. You apply free, see if you qualify, and if you qualified, you can either take the information, you got to try to do it yourself, which I think would be foolish, because you can spend more time practicing law, make more money, or you got to do or a CPA do or whatever. And then how much do you charge to do it?
It's a great question. And the way that we bill for this is unique. As I said, most of the work we do up front at no cost, which is important to point out, and you did, and I appreciate that, is once we determine what the business is going to get or what the firm's going to get, we reply back and say, and I'll use you as an example, is Ken, based on the information you submitted, your estimate was $500,000 for 2020. Because we always start with whatever first period they qualify and then go to the next period. If they qualify for 21 but not 20, we start in 21. So let's say your firm qualified for $500,000 in 2020. We say you're within a very close percentage of our initial estimates of $500,000. It is now for you to make the decision if you want to move forward with us, which we talked about before. The way that we bill is on the front end, we ask for a deposit between $1,000 and $10,000. $10,000 on anything over $500,000 and $1,000 for anything under $50,000. And you can kind of guess how it staggers from there. Most of our competition, what we found is charging far more upfront or net 30 than what we're currently charging. So we just felt like it's the right thing to do. We could do this pretty efficient, and we're not asking for a tremendous amount of money up front. Once the client files the amended return with the IRS, we have insight through tracers with the IRS. So we know what's going on their behalf. In fact, we're now notifying our clients when they're getting paid. We've seen about 36 clients get paid since we started doing this back in March. And it's nice to be able to send a client an email for something they might have forgot of and said, hey, you were going to get $485,000. We just saw a notice from the IRS. You're going to get that in a month. So once they get that check from the IRS, within our contract, it states that you will pay us the balance of our contingency fee. And our contingency fee is very different. And we're doing what's best interest for the client. As they make more, we make less. Again, you make more, we make less. And we start at 15% and go down to 5%. Anything over $1 million, we take 5%. And, I feel very comfortable saying is that, we've created a very unique, streamlined business. And there's a lot of money out there from the IRS, but why should we take more when you make more? So that's our business model. And we've gotten a lot of respect for that.
Absolutely. So if there are lawyers out there wanting to go see if they're qualified, which it costs nothing, so I don't see why they wouldn't, what's the website to go to?
We've created a page called, and our website is ERC Today. So you can go to www.erctoday.com/PILMA. It's a very self-explanatory site. You can go to the page. It says provide some education. We have a great 2-minute video out there that kind of gives a snapshot, an overview of our discussion here today. Some information on the criteria in case you forgot, and then an understanding of our process. And then what's important about the page is that there's an application there. We ask for business information like your demographics, your business name, your payroll company, your bank, PPP information, and then revenue and sales information. Typically, from what we've heard from most of our clients, it takes them about 5 minutes to apply. And once you apply, within seconds, you'll receive a response back thanking you for your application. And then we're off to the races for you.
Cool. So that's erctoday.com/PILMA, PILMMA. Is that right?
That's correct. I hope you know how to spell PILMA.
Yeah. Yeah, I always like the affirmation though.
You got it.
All right. And if anybody wants to get it with you personally, John, how's the best way?
If anybody needs to reach out to me directly, I'm very open about this, is you can reach out to me by email at john.gentille. That's JOHN period GENTILLE at erctoday.com. And for you, Ken, I'm going to give everyone my mobile number. I don't normally do that, but this is special for you. So 803-833-0309. Once again, 803-833-0309. If you call and I don't respond, I love text. You're more than welcome to text me. Email, text, phone. I'll get back to you.
All right, John, I appreciate it. So listen, this is something that could really boost. You can take this money, use it to do marketing next year, at least mid-year, after you get your money. So I think this is something that I hope you will at least get your bookkeeper or whoever your person is to go to this and fill it out and get this money and help increase your bottom line and grow your law firm with it. All right. John, thank you so much. And
Thanks, I appreciate it.
Until next time, this is Ken Hardison, dedicated to your success. Thanks.
You have been listening to the Grow Your Law Firm podcast, the podcast that leads lawyers to more growth, profit, and freedom. Go to growyourlawfirm.com to find more ways to market and manage your law firm. Please leave us a rating and review wherever you listen to your podcasts.